today in the grain market, soybeans did fall. There's more profit taking going on after hitting recent highs. The crops are doing well. There's strong ratings from the USDA that's expected this afternoon, and still there's no exports to China. So the market started a little bit higher, but then brought some big selling in. We dropped down 24 cents. We got down to 10.45 and 3/4, and that's down 16 and 3/4 for the day. Now, option open interest really shows that the most consolidation is at the $12 mark at 26,000 contracts, but there's still a pretty good number at the $11 mark for that November bean contract. So CVAL is at 20% with the soybean oil at 38 and meal at 21%. Corn was also down with rain forecasted for the Midwest states, pressuring futures, even though the USDA export data is showing strong demand. December futures did hit a new recent low. We're back to prices from December. Futures were down 8.25 cents down to 4.33, with July getting down to 4.17 1/4, and even SEP at 4.16 3/4. Now, there, the option open interest in that D's contract, we did add 7,000 calls and puts together, but the 450 strike is the one that really has the highest open interest, a total of 47,000 contracts there. CVAL is up 5% to 30.7%. The weekly ag options are still pretty active as traders really hedge their positions using that product there. So wheat today was lower as speculators end that short covering and sending futures lower as the market really waits for news of any kind of crop damage coming out of the storms they had up in North Dakota. It's pretty much erased all the gains that we had on Thursday. September got down to 5.66 1/4 with July at 5.49 1/2. And there, the option open interest in that SEP contract is highest at the 650 mark with 6,700 contracts. So that's a little ways away, but the big support is at 540. So that's just something to look at going forward. CVAL there is also up 4% to 33.45%. Geopolitical issues are weighing on the grains as well. So that's something to be watching as we go forward.